This video is all about the current state of the market, the financial market and the real estate market. We are going to dive in deep on what's going on, what we can do about it, and what should we be thinking about for the future. This is a presentation that was given at my 7-figure Altitude Mastermind group. Everybody in that room has to pay $25,000 to be there, and you get to watch it right here for free. So I hope you guys enjoy this. I hope this helps change the future of your business. I know that it did mine. So enjoy this video, and I know you'll get a ton out of it.
Go get it, buddy. All right, good morning, everybody. Good to see you. I had two things I was going to say to you. The first thing I was going to say to you that I was preparing last night is I'm really proud that this group, that we've done such a good job explaining the market to you so that you wouldn't freak out. And so I asked, I wasn't here last night. I was kind of putting the finishing touches on the presentation. And I asked Mike, I said, hey, is there anything I need to know that happened last night? He's like, well, pretty much we talked about the market the whole time. And he said, people are freaking out. I was like, what? People are freaking out? Like, what are you freaking out about? There is nothing to freak out about right now. We are in the middle of the pivot. If you are listening to Instagram influencers, YouTube influencers, if you are seeing the headlines in your news feed that are designed, we talked about this, guys, in Cancun. We talked about not listening and reading the bullet points and then creating a fabricated story in your head. Didn't we? We talked about this. So again, I'm going to say it again. You are the news. We are following this group of people right here, just like we were in Cancun, and we are watching human behavior, and we are able to predict human behavior in real time. You're faster than the freaking news. You are the news. So if we're living in an adjustment period this quarter, which we are, we're in the middle of a little bit of uncertainty with interest rates and all this other stuff, but you are in it. When you see stuff on the news, particularly the big news channels, that stuff is lagging, right? So data comes out and then people report on the data. That still actually happens in business where people report on data. It doesn't happen in all of the news anymore, but it does happen pretty much in real estate analytics and business analytics, okay? So you are the news and you're faster than the news, okay? So that is the most important thing you need to understand as you leave here today is that you are the news because you have the pulse on what's happening out in the marketplace right now. How many people's phones, let's do this again, we did this on the call with Andy, how many people's phones are ringing more and you're seeing more motivated sellers? Raise your hand. Okay, now look around, raise them tall, look around. Like this is news, this is the real news that's happening today, right? How many people feel like sellers are more receptive to lower offers than they were 3 months ago? Raise your hand. Okay, this is the news that's happening right now. Okay, so there's no need to panic. All right, so this, my font didn't come through, but that's you on the left. Thank you, PowerPoint. On the right, that's opportunity, and I guess in the middle it's the. It should say the gap is in the middle, okay? So if you remember, when it said my font wouldn't convert, I didn't know what it meant, so I just said okay. So as kids, we used to do this, right? As kids, we would go and we'd run and we'd try to jump over things that, that we thought would kill us. Probably wouldn't have, but we thought it would. But this is actually, you could probably make this jump, but it would be a little scary to make that jump. So just kind of, imagine yourself how much bandwidth you'd have to give yourself to make this jump to the other side, because you certainly don't want to fall down in the middle, in the gap, okay? The gap is where we are right now. What is inside the gap? Somebody just holler out some answers. What do you think is down inside this gap? Spikes, what?
Certain death.
Certain death. Uncertainty. If we're looking for opportunities as real estate investors, we're looking for something that might be a little bit more risky environment so that we can find opportunities. Adam and I were having a conversation last night, Adam Ray, and he used a term that I really liked. It's called seller reluctance. Seller reluctance is in the gap. It's living there right now, right? Sellers don't know what to think. But the fact of the matter that sellers are freaking out right now is a good thing for you. Because let me paint two pictures. Let me paint a picture that shows you that interest rates just kind of hover around 5 to 7%. They really don't go up or down. That's a big stretch, but they're going to stay between 5 and 7%. Let's paint that picture for a second. Sellers will start to get used to that. Buyers will start to get used to that, and they will adjust. after the adjustment, which is in the gap, that's adjusting, is inside that gap. So when that gap starts to adjust, our opportunity then disappears, right? The great opportunities. There's always opportunities. We all know that, right? But I'm talking about a potential really good opportunity starts to disappear as people start to readjust their thinking a little bit. So now where we're concerned as investors is, okay, let's say that I go get a really great deal, a great deal that I think is a great deal. How do you know it's a great deal? Because what if rates go up, in a different picture, what if rates go up to 9% or 10%? That's also living in the gap. The unknown is in the gap. Did you know back in the 80s, I didn't realize this until I read about it, they raised interest rates 10% in 6 months to tamp down inflation, right? There's only a couple of levers you can use to tamp down inflation, and they've chosen right now to use which one? Rates. Right? Let's look at what is real and what is now and not blown out of proportion. These are the mortgage rates, 30-year fixed rates in the last 10 years. You can go on Freddie Mac, find this. You can go on the Federal Reserve site and find this. So there it is, right? So we've got a spike in interest rates, and you can see the rates are doing what? They're bouncing all over the place right now, aren't they? But car loans are still pretty low. Rates are bouncing all over the place because mortgage companies are trying to figure some stuff out. There we go. Okay, so let me tell you what this one is. This is the 30-year fixed rate mortgage rate in the United States, the same one you just saw. And then I pulled the trend line of housing values from about 1975, right? So they don't really sync up exactly on the left-hand side. As you can see, there's a little bit left over here in the 70s. But pretty much from here on, I lined it all up for you so you could see what has happened. We know what happened here, right? Great Recession. And for some reason, the recessions aren't showing up in here, but there was a little mini recession in 2001. There was a recession in here in the 80s. And where was the other one? I think there was one in is it 91 maybe? And look what happened. So in the 80s, what did property values do in the last recession, in the 80s recession? Look at the rates. But the values basically went up. What about, I think it was it 91, right? Going up, 2001 we had one, remember? They went up, right? We know what happened in the Great Recession. Real estate got killed and punished. But you can see the trend line for 40, 50 years of what housing values and rates are doing. Okay, is it possible? Is it possible that this right here mimics this? Is it possible? Sure, it's possible. My son, it's funny, I like Ronald Reagan, and I just liked him. He reminded me of my grandfather, so he was a great president because he reminded me of my grandfather, right? So my son's like, Dad, because my son's studying finance right now. He's like, Dad, the problem with the economy right now is because of what was instituted back in the 80s. I'm like, you should write a paper on that, and I will read your paper, right? So there was a lot of economic policy change going on back in the 80s, wasn't there? A lot of deregulation, a lot of stuff was going on. Is it impacting us 40 years in the future? I don't know. I don't study that stuff. I don't have the time to do that, but I hope he writes a big paper on it so I can read it. Okay? All right. Now, here's what's interesting. You guys have heard me talk about the U of M consumer sentiment study all the time. This is the one piece of charts that I love to look at because it talks, remember that big crowd of people? This is studying the big crowd of people. And what is really interesting right now is we have consumer sentiment at a low point that we had back in the recession. What does that mean? I don't know what that means. There's a lot of fear in the marketplace, though. And there's a lot of opportunity for us as investors because people are freaking out. I don't understand why. Why are people freaking out? Most of them have 3% mortgages. Most of them have really good paying jobs. Why would, I know there's Ukraine, there's lots of crazy stuff going on in the world. Why would people be freaking out when they have 3% interest rates and good jobs? The news is the predictor of your future. They're doing our job. If you're freaking out a little bit because you're watching all the headlines and the influencers and all that stuff, and you're reading the bullet points and it's creating your brain to just kind of make some adjustments in your head, you've got to protect your mind and pay attention. If you want to win, you have to protect your mind and pay attention. Be around each other. Like the reason we're here today. Like nobody needed this event more than I needed this event this weekend or this week. And it's because I needed to be around people who thought like me. I basically closed on these lodges that you guys have all heard about. Like Grizzly Adams, I went up to the mountaintop for 2.5 months to put my head down and get those things ready to produce some passive income for us. And I came down from the mountain, got on an airplane, and came to Chicago because I needed you. And we need each other. I was tired. I was exhausted. Been listening to the news, reading some bullet points, right? Make sure you stay plugged in, you keep your ears low to the ground, and know that you guys are the news cycle that's happening, and you have access to any kind of data that you want long before it's ever reported on. Ukraine is old, COVID is old, there needs to be a new golden child, and the new golden child is predicting a recession and inflation. That's what sells advertising dollars, right? If we can all stay focused on the fact that the news' primary job is to make money and sell advertising, why in the world will we let it impact our mind? Okay? Now, the reason I come to you and I preach this today is because back in 2008, 9, and 10, when I was a real estate agent and I went broke, I finally figured out the one thing that was messing with my head was watching CNBC. So I turned the news off for almost a decade and didn't watch it. So because if I needed to know what happened, somebody would tell me. Like Michael Jackson died, I'm like, oh, what do you mean Michael Jackson died? I didn't know that. Somebody had to tell me Michael Jackson died, right? Or all the big stuff. How do you know what houses are worth? This is a big one. When you're in that like gap and there's all this uncertainty and stuff, how do you know what houses are worth? I don't know what houses are worth. Let's come up with an idea though. We talked about this. For every 1% an increase in interest rates, how many people do you kick out of the market? 11%, right? 11%. So does it make sense that if rates are at 5% today, 5.5, whatever, how many people are we kicking out of the market? How many percentage points? 2 points times 22%. Thank you for the 2 people. 22%. Does that match this bold sentence at the end here, right? The unadjusted purchase index increased 16% compared with the previous week. Why do you think it went up so high? 16% increase week over week is pretty impressive. Why? What did rates do? They went down about half a point. Is that about right? Somebody? 3/4 of a point. They took a giant dip, which caused more people to apply for mortgages. That's what happens week over week. All you have to do is look at that and go, okay, it went down this week. Why? Was it seasonal or was it a rate issue, right? Okay, now here's the other interesting part. 19% lower than the same week 1 year ago today. Is 19% and 22% pretty close? So this is accurate, right? We kicked 19% of the people out of the house buying game from a year ago because we have about a 2% increase in rates. And we talked about that. We talked about this too, but I feel like we have to hear things 7 times, so I'm going to go over it again. Waterfalling. This pool down here represents the availability of affordable houses for the people that are in the marketplace today, whatever they're looking for. If they're looking for an $800,000 house, $1.2 million, whatever it is, this is the pool of available housing. As you raise interest rates, you have all of these streams from all over the mountain. I'm using mountain analogies now because I've been in them for 2 months. So you have all these streams coming off the mountain in different places, and then they waterfall. Okay, so you've got entry-level buyers, they're out, right? They can't afford a house anymore. So the next stream waterfalls down and it collects in this pool. The next stream waterfalls down. So it might be a $500,000 buyer. They're going to waterfall down into a different price point, a different pool. And that is how all this stuff starts to interact in kind of a natural analogy here. But what was interesting, Adam and I last night at dinner, I'm like, hey, let's check it out. So if you wanted to buy a $500,000 house when rates were 3%, I think it ended up being, without taxes and insurance and everything, it ended up being like $2,200. Is that right, Adam? Yeah. Okay, and so then we ran the math and we said, okay, what if you want to buy a house at $500,000 at 9%? That came out to be about $4,300. A little bit different, right? A little bit different. So do you think there's waterfalling if we get to 9%? Absolutely. So then from a pivoting standpoint, to quote our famous investor Ross Geller, is you need to make sure you understand where your business is headed at that point. Probably you talked about this last night. Where's your business headed? If the people are going to waterfall down into this pool, you want to have inventory in this pool. That's what you want. It's hard because you say, people come to me and say, what should I do? Well, I don't know your business. Some people are in short-term rentals. Some people are in long-term rentals and short-term rentals. Some people are in flipping. Some people are wholesaling. It really just depends. Where I have concern for people is if you bought comps based on comps in 2020, 2021, and 2022. You guys need to look at your library of inventory and figure out what you have to do to pivot and what you have to do if housing values either level off or start to go down. Because let's face it, most of us, not all of us, because some of you are running really tight ships and businesses right now, but most of us have benefited from the fact that appreciation was going through the roof, right? Hardly any of us are under budget, right? So we're not really under budget. Most of us are over budget, and we're gaining appreciation. And so then we don't pay attention to the fact that we're over budget because we're making a big spread anyway. Well, that big spread is about to get its head cut off. And so now we have to run tighter ships and tighter operations, which I think you guys probably talked about a little bit last night. You have to tighten up your operation. And I think Andy's going to talk about that a little bit as well. Okay, so here's the deal. No freaking out. If you wanted opportunity, now's the time that you can go get some opportunity. If you have inventory that you're trying to figure out what to do with, then get in an accountability group, get with other people that are in similar stages as you, and start to kind of understand and analyze what you need to do. Rents are going where? Up. Why? I mean, look, this pool only has so many people, so the 22% of the people that just got kicked out of the market, what are they going to have to do? They'll have to rent. They have to. There are no other options unless you move in with mom and dad. Okay? So they have to rent, which is pushing rents up. So there you go. So if you've got stuff that you're sitting on and you're worried about it, you could rent it. You could do other things with it. If it's in a good location, you could turn it. I mean, you might have to pivot and get the couch stuck a little bit. It's not going to be super easy, and sometimes it might be a little messy. But at the end of the day, you are the racehorse in front. You are the ones that know before anybody else, and we can't be afraid. We can't be afraid, and we have to be there for each other. So the State of the Market's a little bit different. I feel like I'm more of a pastor than I am anything else. But you need to make sure that you stay in the game and just pay attention all the time, but pay attention in the right frame of mind. Does that make sense? Because I read the news too. I see it. I'm scrolling through my news feed. I will find my own head getting sucked in just like all of us do. But we have to hold each other accountable and sharpen each other's axe when we can. Okay? What was cool yesterday, real fast story. I loved my hot seat room. I could do it all day again today. Stan is standing up there. He wants to grow his business. And, I don't have my tag on, but, we're all walking around with these culture index profiles, right? And it's easy to put people in a box and say, okay, you got this culture index profile, and this is who you are. I wish I was this. I wish I was a daredevil. I wish I was all this. No, you don't. Because you've been wired up in a very unique way, and all this little tag shows you is one box and 16 boxes that you've been wired up in your character traits over time. That's it. So, Stan, can I use your example?
Too late now.
Well, I haven't given any details yet. So Stan stands up there, and we could argue that Stan's done a great job with his business, and he's doing really, really well. Stan's getting buried with some administrative tasks, but Stan, being an operator, likes to maintain control. That's the operator profile. They want to stay in control. So finally, the light bulb went off, and I'm like, well, how in the world can we serve Stan, who wants to basically really think things through, and he's very patient, and he's going to grow his business, but he doesn't really say, I want to go get 100 houses. He's like, I want to see what happens. Okay? Think about that. I want to go do 100 houses, or I just want to see what happens this year. There's a difference in that. Stan could do 100 houses if he sees what happens, right? Because that might be it. But it's a different thing. Somebody sets this goal over here. Somebody says, I'm just going to grow my business and see what happens. There is nothing wrong with that. And that's what I told Stan. There's nothing wrong with that. dude, seriously, like in a market like today, I'd put my money on that racehorse, right? Because it's slow and steady, methodical, thinking through, making sure you're doing the right things. So we showed Stan how to win in the market, release a little bit of his, keep all the control he wants, but release some stuff out that is burying him and burning him out, right? So he can focus on his superpower. So the state of the market for each of your businesses is going to look different based on how you're wired up and hardwired. So if you have questions, concerns, comments, always ping me on Facebook. I'll try to answer them when I come down from the mountain, okay? All right, thank you guys.
If you like that, Terry Berger is going to be giving a presentation about the current state of the market in October, live at Flip Hacking Live. It's an event that we do every single year in October. This year it's in Orlando, Florida, October 13th, 14th, and 15th. To grab your ticket, just click the link in the description, grab your ticket to this event, and you'll watch an updated version of that with Terry talking about what's new, what's happening, and then what you can do about it. There's also 25 other speakers that are going to talk about what they're doing in their business, how they're making millions of dollars with techniques and strategies. They share it all. Nothing held back, just like this video that you guys saw today. So I hope you join us, Flip Hacking Live. Click the link in the description. I'll see you there.